Ladies and gentlemen, fellow traders, friends, welcome to the live show. It's good to see you again. Lovely to have you on board. Lovely to have you here. Today I'm going to talk to you about how to trade, looking less at the screen, sort of for 2 hours a day rather than 16 hours a day. So many of you get caught up in this situation where you take on trading to have a better life, and then you end up sitting watching the screen for 16 hours a day and following all these trades and all squiggly lines and candles and things. And it's actually not necessary at all, not even close to necessary. So we're going to talk about that today. Hi, Tywald. Hi, Blue Mango. Lovely to have you. Isn't it a lovely time to be alive? Everything's happening in the markets. Markets are volatile. Things are going up and down on a daily basis. What amazes me the most, what really freaks me out, is how many traders see what's going on in the world. They see the world going the way it's going pear-shaped, and they still believe in investing in indexes and it's going up and everything's going to be fine and everything's just going to be normal. It's not going to be normal while this is happening. Unless it ends tomorrow, then things will be normal. But it's not normal. It's unusual and it's not good for markets. Well, it's good for volatility. It's great for trading, especially if, like myself, you're short on the markets. But yeah, it's not that simple. It's not that easy. I'm going to take my picture out of the way and let's just go and have a look at the charts. And we can see what exactly is going on the charts before we start going crazy and talking about all these other fancy, wonderful things. So I finally went long on gold because gold came all the way back down to retest. So I actually took myself a long on gold. So gold is there. I'm in on the gold. And I've already taken the S&P short, probably far too early. I went short on the S&P and it keeps going up. So, you know, that's the way it goes. That's why I say to you, I can hardly believe how people feel so comfortable during these incidents. It's happened often. And lately in the world, most people are just sitting back and watching what's happening in the world like nothing's happening. It's quite crazy. The volatility index has dropped down a little bit. It's a little bit less insane. I still believe Bitcoin will go down. Somebody mentioned to me today that they think, actually think that I might be wrong and that Bitcoin might go up. And that's the lovely thing about markets. Markets are between a buyer and a seller. Someone will believe something's a buy and another person will believe it's a sell. And I still believe that Bitcoin will eventually find its way down based on what I saw in the market with the big head and shoulders on the day chart. I had a look at that. And for me, it looks like it might eventually go short. And what you find when you're looking at charts all day, by the way, we're going to go into this shortly, is when you see the candles going against you, you kind of tend to preempt trades that you don't really want to preempt. You tend to get in and out of trades when you really shouldn't be doing so. You tend to jump in and out of trades far too quickly, which is never a good thing. It's never a good thing at all. So yeah, long on gold, short on the S&P. Another thing I took a long on was the US dollars ZAR, and I took it far too early as well because I don't wait for retests. Everybody waits for retests. I knew it was going to retest. I even said to everyone it's going to retest, and it retested. It went back and retested. But I don't wait for retests because half the time they don't happen. So yeah, I'm kind of long on that as well, but you know, maybe I should have waited. We'll see. And then US dollar, the US dollar index, well, Dixie, I really would like to see that go above 100 to make it more comfortable for everyone. It hasn't done so, so we'll have to see what happens with that. Hello, Liesel. Hello, Penny and friends. Simple and effective strategies. Let's go. yeah, let's go. Let's go and talk about it. Let's go and get on with it and let's chat about it today. It's going to be an interesting day. And one of the big things I want to talk about today is the 2-hour strategy. And why do I want to talk about the 2-hour strategy? What is the 2-hour strategy all about? And it's really simple at the end of the day. Now, you're probably thinking, Rob's 2-hour strategy would be more of a situation of coming in at European session or coming in at the USA session, and I'm going to start trading now for 2 hours. I'm going to quickly take trades on the 5-minute charts and the 1-minute charts, and I'm going to make $200, and then I'm going to be off down to the beach, and that'll be my day. And that's what a lot of people will teach you about trading for 2 hours a day. Come in at the European session or come in at the USA session and take those 2 hours trading and make a profit and go away. The big problem with that, and the biggest problem with that is You're going to come in with all great intentions of trading for 2 hours. You're going to come in and you're going to trade on the 5-minute charts for 2 hours, and you're going to make no, you didn't make $200. You lost $400, and that's where the problem comes in, because that's going to happen more often than not, especially if you're trading on 5-minute charts. You might think you'll be able to do it because you watch the other guy that does it every day and he does it so well. But that's him. That's not you. You've got a different fear. You've got a different FOMO. You've got a different way of thinking. So you can't just trade like that person. So you've got to really think this through. You can't just go out there and start trading on those charts. It's not that simple on those 5-minute charts and trade for 2 hours and make $200. In all likelihood, you lose $400. So tomorrow when you come back, you don't have to make $200. Now you're going to make $600 because you lost $400. You need to make another $200. No, sorry, you're going to make $800, not even $600. So suddenly that $200 becomes a humongous task of making $800 because you lost $400 the day before. And it's just going to get worse. So that's never going to work. That's not the way to trade for 2 hours a day. So how do I do it? How do I come into the markets and simply only trade for 2 hours a day? Hi guys, I'm glad you're here, first time to join live. Now, what I do is very simple. I look back to when I started trading, and what happened to me over the years when I started trading is I came along and these computers came along, and I myself got stuck looking at charts for 16 hours a day. I got stuck watching green lines, red lines. I got into the markets and I started following the news. I had Bloomberg on the wall and CNBC and all these different news channels, and I was listening to the fundamentals and I was watching charts all day. And then I got to a point when I had the aha moment about make more on your wins and lose less on your losses. I got to the point where I thought, Rob, what are you doing? What are you actually doing? Are you insane? Have you lost your mind completely? Because I'm sitting here looking at charts for 16 hours a day, and I wanted to have a more relaxing life. And when I started trading, there was no computers. When I started trading, we used to trade shares, and I would buy the newspaper in the afternoon. Think about this. I used to buy the newspaper in the afternoon, and then I would get all the prices and go through all the prices and see what happened in the markets. And then I only traded shares back then, and it wasn't even leveraged. It was just what I do now, investing. I just leave the money there, but in those days, I thought I could trade them. So here we are, looking at the newspaper, looking at the prices. Choose from the little charts that I put together, choose which shares I'm buying tomorrow morning. Okay, tomorrow morning comes along, guess what I do? I go and buy another newspaper, go and make sure that the prices are still in that sort of region, go through everything, and then sit and look at my charts, which I've drawn by hand, by the way, and then say, well, I want to buy that, get my old dial-up telephone out, and I would phone them and say, I want to buy these shares, and they would buy them for me and buy them on the open market, and then that would be my trades, okay? And then all I would have to do for the day is effectively a little bit of research on the charts, a bit of research on the prices I've got, which wasn't really that long, and then I had the rest of the day to myself. Keeping that in mind, then in the afternoon, repeat, go and get the newspaper, have a look at it, and perhaps watch the news on TV. That was it. Most of my day was pretty free. It wasn't that difficult, and it was all manual. It wasn't even computerized. When computers came along, I went insane. I suddenly had to watch charts all day. I suddenly had to watch the news all day. I suddenly had to be part of the whole game constantly the whole day. So after many years, I realized, you know what? I don't need to do this. I don't need to sit and look at charts all day. I don't need to sit and watch the charts go up and down. I can literally come in the morning, do a bit of research, look at what the prices are doing, look what's happening today, choose my trades, put them in place, put a line there, buy and sell, whatever the case, leave it in place, and come back later. During the day, I've got cell phone technology now, don't I? Mobile phone called in some places, here we call it cell phones, which has got all these charts on as well. So even if I'm out shopping or down the beach or having fun or having lunch, I can take my phone out, go, I'll have a look at that and just see where I stand. Isn't it horrible when you open your phone and you like got major losses showing on the, yeah, no, that's not great, is it? But anyway, you think to yourself, I should be sitting at my chair watching the charts, but no, you shouldn't. You shouldn't. You need to leave the trades, because what happens when you sit and look at the charts all day, and you'll agree with me on this, when you sit and look at the charts all day, let's say I've taken a long trade on, well, I've taken a short trade on this. This is S&P 500. So I've taken a short trade and it's gone against me. Now, the natural reaction, if you're sitting watching these charts and you see these big candles growing, is to think, I need to get out, I need to get out, I need to get out. You need to get out of the trade. But what you got to understand about charts is they go up, they go down, they go up, they go down, they go up, they go down, they go up, and they go down. And when I chose the trade, I had a plan in place. I looked at the plan and I said, well, the world's ending, so let's go short. Well, that wasn't really the only part of the plan. I also looked at, there's a resistance line. There's an area where this has been in a range. This is looking rather bearish. It looks like it's going down. Let's take a short trade. And you take the short trade with great plans and you think, this is really going to work out for me. This is going to make me an absolute fortune. Then it goes against you. You come back the next day and it's gone against you. But the whole point here is it's still in structure. It's still going the right way. It hasn't gone to your, the reason you put the stop loss there is because you thought, well, if it goes past that prior high, gets to that level, then I know I'm wrong. Perhaps I should get out of the trade. Perhaps that's not a good place to keep the trade. I understand that I've made a mistake and I shouldn't have taken that trade. But as long as it's in this area, it's still going for me. It's still going the right way, even though I'm in drawdown. So now I'm not getting out of my trades too early because I'm not watching my trades for 16 hours a day. Most of you would get into, look, okay, most of you probably get into trading because you want to make money, all right? I understand that, you want to make money. But a lot of you will want to get into trading for a bit of free time, for a bit of more, a better lifestyle, for a better life maybe, you know, not just to make money. So now you get into trading and you find yourself stuck behind a computer screen or computer screens, like millions of computer screens all day, and you find yourself just watching trades all day long, hoping that somewhere down the line it's going to go in your favor, perhaps. I don't know. That's the problem. And then you lose that freedom completely because trading's not an 8-hour day. You know, you can't come in. We all live in different parts of the world. We all live in different parts of the world. Some of you live in, well, I guess none of you live in Iran right now because things aren't going well there. But, you know, some of you live in America, some New Zealand, some Australia, some South Africa, some England, some Germany, some Italy, you know, whatever the case. And you live in all these countries and you've all got different time zones. So for you to think like it's a normal job, you come in at 8 o'clock in the morning and you go home at 4 o'clock in the afternoon, it's not that simple because markets are open, well, from my side, from early hours of the morning till 11 o'clock at night. I mean, they only close for about an hour, and then, of course, they close for the weekends. Unless, of course, it's crypto, then it's 24 hours a day. So now you've got to look at this scenario and think, well, if I want to have a bit of sleep and I want to get up in the morning and I want to take my trades, surely I can't be worrying about what time that market opened, what time that market closed, or whatever the case. Now, if you're trading on 5-minute charts, really important to know what time the markets are opening. Really important to know that you're coming in at the European Open or the American Open or whatever the case. Really important to know what time the market's opening if you're trading on a 5-minute chart. But if you're trading on an H4, why do you need to know that? Why is it so important? I mean, if you're trading on a day chart, I mean, you literally, it's a day to day to day to day. You're looking at what's happening on a daily basis. And then an H4 is not much different to a day chart, very close to that. So you're looking at a longer term period, a longer term trade. So you look at the overall pattern over a longer period of time. So you're looking at the overall pattern on your chart over a longer period of time. And you're thinking, well, it's actually broken through that resistance over here. So it's broken through that resistance, come back, retested and gone up. It's come back, it's broken structure on the support, but it has bounced off this resistance again, which is now a support, and it's starting to go back up. I could actually change that into a support now because this is fast becoming a support. So what we need to do now is change our whole picture. So even though we took the trade because of that, what I can do now is maybe move that up there and take what was originally the old support and bring that up, if I ever can, if it'll allow me to, bring that up to the level where it broke through and just have a look at that. And that now becomes a new support, becomes a support level, but it broke through, came back, support going up. This is a new support level. So now it's supported there and it's going up. So now we've taken the long trade there. Really simple, straightforward, easy. So now you decide, okay, I want to take a trade on that. I want to go long. So you look at your long trade and you say, I want to go long. So I'm going to put my stop loss over there. I'm going to put my take profit up there, and I'm going to need a lot size, and I'm going to take that trade. And that's it. Okay, that's as simple as it gets. Take the trade. Trading's 50-50. You've got a chance of winning, got a chance of losing. But there are some fundamentals behind it and experience which goes with it. I mean, it's not just willy-nilly. But once I've taken my trades and I've put my trades in place, then I go away. It might take me half an hour. It might take me an hour. It might take me 2 hours. Even if it takes me 3 hours, does it really matter? I'm not going to sit the whole day looking at those charts. In fact, I'm going to close up and I'm going to go. And I'll go and do my thing. Well, these days, because maybe I can't, fill my time and my day completely with everything. I make YouTube videos for you guys and show you how to trade. I keep myself busy because I don't have businesses or companies anymore. Those are all gone. So I keep myself busy with trading. And so now I've added a bit of YouTube to that to keep myself busy. I don't sit and look at charts all day. So once I've done my research for the day and I've chosen my trades on the 4-hour charts, the day charts or whatever the case, and maybe I want to add to some of my investments or something like that, then I'm done for the day. I'm only going to check back on my cell phone if anything's going pear-shaped. And if anything is, I'll come back during the day and go and check, because I'm always pretty close to my office anyway. I'll just come back and check if there's something that I need to do, something that needs my attention, whatever the case. But I mean, if I need to sell something quickly, I can do it on my phone. I don't need to be here. I don't need to be sitting down here. And that's what you guys have got to understand. And I know that in times of strife and volatility like there is now, with things happening in the world and lots of things going on, that you sometimes feel the need to keep an eye on it. And that's actually the worst time to keep an eye on it. Really the worst time, because in times like this, the markets will jump up and down. They'll shoot up, they'll shoot down, they'll shoot up, they'll shoot down, because there's a hell of a lot of confusion in the markets. And it's not about retail traders. We make up such a minuscule part of the market. It's institutional money. It's big, big money. And those guys have got a lot more to worry about than you and me. Well, maybe not, because, we worried about our own money. We might run out of it, whereas they worried about losing their jobs. So I don't know. But I suppose the worry is the same. But at the end of the day, they've got a lot to think about, a lot to worry about. They've got a lot of information that they're working with. They're working with news flow. They're working with stuff that's happening for real. They're not just looking at charts. So for them, they're looking at what's going down, and that can be quite confusing. So that'll send markets up, send markets down, because one minute they're saying to them, oh, we've won, and the next minute they're saying, oh no, we're still going on for another 4 weeks. And there's all these different factors they have to look at. How's that affecting the shares? How's that affecting companies? How's that affecting the markets? Where's the money going? And how much is it going to affect the markets over a period of time? And each, the period of time that these geopolitics continue also determines the kind of future you're going to have for the profits that are available to companies over a period of time. And for example, if something was to happen to America or the UK or Germany, how would that affect markets and that sort of thing? These are all things that they think about, that they're working on constantly in the markets. And so that's why I say I don't profess to trade for 2 hours a day on 5-minute charts or 1-minute charts. I don't do that. That's rubbish. What I do is I spend a couple of hours a day working out my trades, working out my research as to what I'm going to trade, how I'm going to trade it, what my plan is, and then put those things in place. Maybe check back on what's happening with my previous trades, what I need to sell, what I need to keep, and have a look at my investments, that sort of thing. It doesn't even really take me 2 hours a day, and I spend most of my day doing whatever I want to. I don't have to sit and look at charts. And then, of course, during the day, I will check back and see if there's anything else. But it's quite easy, really, if you take a bunch of trades. I mean, you can even go and look on the side and go through all of these and look for trades if you don't have enough trades. But once you've taken a bunch of trades which you feel are close to buys and sells, and you've put them into a package like this, or maybe you've got them one by one or whatever the case, you can just go through the trades and see how close they are. And how close they are, or whether they're worth a trade or not in the morning. If you come back in the afternoon for a quick check, which sometimes I do, you're not going to find much difference usually. I find myself checking 2 or 3 times a day. I do that. I come back and check and just see if there's anything that's changed or something that's happened or gone on that I can work with. But other than that, no, it's you can leave it alone most of the time and just come back when you need to. Leave the news events alone if you can, because the news events will drive you completely insane. That's my story. That's my story for today. And I hope you enjoyed that. Now let's talk about whatever else we want to talk about on this wonderful live show today. Perhaps geopolitics. Right, so let me go through the chat first. Okay, I've been following your teachings lately and found it to be helpful, especially around how to think when it comes to trading. Very simple to follow. I'm glad you're enjoying it and welcome. And I'm glad you're here on the live show. And the live shows are here for you guys. They're not for me. So like I always say, there's a lot of people that have live shows and they just sit here and they trade and they show you how they make $50 or $10,000 or, all this. I'm not here. It's not about me. This is about you learning something. It's for you to learn something. Ask your questions in the chat. Follow what we're doing. And every single live show, I try and give you a story or a bit of training or something that'll help you learn from my mistakes and what I've done in my life and markets and things like that, or maybe just help you with your trading in your markets and that sort of thing. That's what it's mainly for. Okay, and right, so any thoughts on gold? Yes, I'm long on gold. Where's my gold trade? Where's my gold trade? Where's my gold trade? Where's my gold trade? This is one of my gold trades. I got a few. But anyway, this particular one, I got a gold trade. I finally took it. And did I take it today or yesterday? Not sure. Anyway, doesn't matter. Took a long trade with a take profit at 5,600. I think it's going to go to 5,600. Just remember, the charts can't predict the future. You can't predict the future. I can't predict the future. So I'm not predicting the future. I'm not giving you financial advice. I don't give financial advice, right? I'm just telling you what I think. And then from my perspective, this is going to go up. It's going to go up to 5,600. A lot of people will call it short because, it's broken to that area there. But at the end of the day, I'm looking at the things that are going on in the world. And gold is very much a safe haven trade. Very much an area where people will put their money. At the moment, everyone's putting their money into oil. Where's my oil trade? Oil. Where are you? Oil's going insane. It's gone all the way up here. Everybody's dumping their money into oil, or they're dumping their money into the US dollar, the Dixie, because they feel safe with their money there. So gold has been left by the wayside a little bit, but gold is always an area where money goes when things are a little bit in strife. And there is a little bit of strife at the moment. Now, the reason gold is haggling a bit at the moment is, firstly, people put a lot of money in the oil, they put a lot of money in the dollar maybe, but also there's still this, like I said, I think traders are insane because they keep on thinking that everything's going to be fine. We can just trade as normal and nothing's going to go wrong while the world is wobbling. So it's a bit crazy, but the world is wobbling. So gold is a good long trade, not a short trade. It's better to be long when the world's wobbling than short on commodities. So commodities are a good choice for a long trade, not a short trade. If the world was steady and happy and fine and smooth and whatnot, I'd probably be looking at the possibilities of a short based on the technicals. But based on the technicals, you can also look at it as a 50-50 for a long, because the only thing that's causing it to go short is the break in structure there. But if you look at this structure, this support is holding it up beautifully. So that's the next main structure on it. So that support is strong. There's a lot of money here. You're always looking for liquidity. The liquidity is where the institutional traders are moving markets and moving their money, and they're all moving their money at this level. And that level is causing this to push up slightly. So I'm thinking it's going to push gold up. So that's my answer on gold. I'm long on gold. I wonder if you still journal your trades. No, I've stopped journaling my trades. I don't bother anymore. You know what traders do, and I just gave you a whole spiel on spending 2 hours a day working on your charts rather than 16 hours a day. What traders do is, because there's not really that much to do. Let's be fair. There's not that much to do if you're trading. So what are you actually doing while all this is happening? So what a lot of traders do is they start creating extra work for themselves. Loads and loads of extra work for themselves. Heaven alone knows why. I used to do it as well. I'd create all these extra spreadsheets and this and that and the other, and I'd add all these little things on, and I'd work out this profit and that loss and this and that and the other. And I'd go nuts. I'd go completely nuts. And then journals and pictures, and I'd take a picture of every chart and put it on my journal, and I really went to town. But then I realized, after a long period of time, I realized, hey, Rob, how often do you actually go back and actually sit, really properly analyze those trades? How often do you do that? Ask yourself that question. I think a lot of you are going to be like, well, not really that much, you know. And I thought, well, I'm really kind of wasting my time here. Why am I doing that? Why am I not sitting in a coffee shop having a cup of coffee with a friend, talking a whole lot of rubbish about Formula One or something? Why am I sitting here making spreadsheets and doing all these funny things? In the beginning, don't get me wrong. In the beginning, when you're brand new to trading, journaling is a good thing because you can understand what you did last week. But most of you, especially when you're younger, have got a good enough memory to kind of remember what you did. And if you make a mistake, believe me, you don't forget. Okay? I don't know many traders who forget their mistakes that easily because they stick in your mind. So that also came to me as journaling's a lot of old rubbish because, I mean, I don't forget my mistakes. Even at my age, I still remember, you know, like if I make a mistake, I'm like, oh, I shouldn't have done that. Doesn't just disappear. It sticks in my mind. I won't make that mistake very easily the second time around. So yeah, journaling for a beginner, it's great. You know, you can get in there and you can remember what you did, why you did it, and how you did it. And it'll take you back and all that sort of thing if you really want to do it. And it's probably positive for the first 2 years or so. But when you've been trading for 34 years, dudes, yeah, really, journaling's like a complete waste of time for me. I don't waste my time. I don't even back test. I forward test. In other words, if somebody comes to me with a great idea for trading, Rob, this is how you should be trading. Your system is rubbish. Look at this one. I'll look at it with pleasure, but I won't back test it because back testing is a lot of old rubbish as well. And a lot of you are going to argue with me on this one. But when you're back testing, you're looking at history. And history's great. And you can back test and you'll get some information from it. Okay. But what you want to do is forward test. And the reason I tell you to forward test is get a demo, any demo somewhere, find a demo chart somewhere. Okay. And then test the system forward. And the reason I tell you to do this is because you don't know what's going to happen next. And when you don't know what's going to happen next, that's the best way to test something because then you know how it really works. Then you know how it really, really applies. If you backtest something, I don't care what you say, in the back of your mind, you've got an idea of what's happening next. You've got it, you know it's not going to crash. You know it went up, you know it went down. You just in the back of your mind when you're backtesting something, you know where that product went. You've got an idea. Okay. So when you take those backtesting trades, you kind of bias towards that. Whereas if you're forward testing it on a demo for 2 weeks, and you only need 2 weeks to see if something works, then you know that you don't know what's going to happen next. When you take that trade, you've got no idea what happens next. And that's why I show you trading from live, from today, from what's happening now. I don't show you what's happening in the past. I show you what's happening now. What's going to happen next? I don't know what's going to happen next. You don't know what's going to happen next, but we're talking about it anyway. We're saying gold's going to go long. If it goes short, yeah, maybe I look like a fool, but then I told you it's 50-50, isn't it? I'm not a genius. I can't predict the future. I'm just saying that from my perspective, this looks like it's going to go long for whatever reasons. That's all. That's all I say. Okay, so forward test your stuff. Don't back test your stuff. I know I'm going to get a lot of flack for that, but it's the best way. Okay. So, right, let's see. Okay, Australia. Welcome, Australia. Good to see you guys. I always love Australia. I don't know why. Maybe I should have lived there. Maybe I should have been born there. I just love Australia. I don't know. I just got a thing for you guys, man. Morning, the wonderful UK. All ha. Yeah, Kevin. Good to see you, man. Good old gold Scotland. Yeah, I'm long on gold too, Rob. Loving your live stream. Thank you. I'm glad you're enjoying it. Mate, he's on goal. He mentioned it at the start of the stream. Hi, Rob. Keep streaming daily, brother Rob. I would stream daily if I could, but at the moment, yeah, I was always streaming on Tuesdays and Thursdays, and at the moment, you'll see I've dropped it to just Thursday. And the reason I've done that is not for me. It's because, well, it is in a way, but it's not a selfish reason. It's because I've got a father-in-law that's been in hospital. He's been in ICU for 3 or 4 weeks. Okay, he had a bad aneurysm and he was gone. And we got him back and we've got it sorted out. Now he's in a recovery unit and all the rest of it. But I'm spending a lot of time on that as well. You know, getting the oak right, and hopefully I can get him home eventually. But you know, so that's taken a bit of my time. And I do have lots of time, but, you know, doing the live show twice a week is just getting in the way a little bit. So I dropped it to 1 for now. I'll bring the second one back for you guys, but doing it every day, that would be quite a lot of work that I'm applying for myself. And like I said to you earlier, you know what we traders do? We make more work for ourselves. We're always making more work for ourselves. We're always like adding journals and all these types of things to keep us busy. And like I said to you, it's insane. I do my couple of hours a day and then I'm off and I enjoy myself. I've added this YouTube into my life because I do need something extra, something to keep me going, something to keep my mind going, because otherwise I'll be sitting in coffee shops and on the beach all the time, which is insane. So there's a lot of time you've got to spend doing other things. So I do this and it helps. But if I do add a live show in every day, I would like really put myself under pressure. So I don't want to do that as well. End of the day. So you're getting 1 live show a week at the moment. I will try and bring the second one back pretty soon. I had a meeting with the medical people yesterday. We had a long discussion and it looks like another couple of weeks and everything's going to be okay and everything's going to be back on in focus. So yeah, we can go for it. That'll be great. Okay, keep stringing down. Hi, Rob. Do you enter trades during certain sessions or when the trade is ready to enter? I do not enter trades on sessions. I enter trades when they're ready to enter. And that's the whole point. That's why I went through that whole spiel of the 2-hour trading. Is a lot of people will come in, and if you're on 5-minute charts, I mean, if you're trading on M5, then you're going to come in at a certain session. You're going to come in the European session. You're going to come in the USA session. You're going to say, I'm going to trade this at that type of session because you're trading on 5-minute trades. But I don't trade on 5-minute charts anymore. I trade on H4. And sometimes you can trade on day. And then you don't need to come in at a certain session to trade on those sessions. You can if you want to. You can wait for opening and that sort of thing. But the trouble with your opening is you get the sweeps and you get the liquidity sweeps and all the rest of it. So what I do is I just trade on what I see when a trade is ready. I look at the trade, I look at the support, I look at the resistance, I look at where the trade's going in general, remembering that I trade on a long time frame. So the longer the time frame, the more time I've got to look at the trade. I don't have to trade it at opening or trade it at closing or anything to that effect. I can trade it when the trade is ready. When the trade looks good, I'll take the trade. Keeping in mind though, for example, if I'm trading the S&P 500 or the NASDAQ or one of those, you know, I've got to keep in mind what's happening in the greater scheme of things, in the bigger picture, what's happening in America. Will the news this afternoon affect my trading? Will something happen that's going to cause it to go the other way? So I've got to keep that in mind as well. So while I won't wait for opening to trade it, I will keep in mind what might happen next or what might go down next. So, you know, you've got to keep that in the back of your mind at all times. You can't just like willy-nilly just take trades. But yes, I take trades when they're ready. Okay. I've seen a video where a trader claims that 1-to-1 risk ratio is the best. I guess he must be scalping. What do you think? Okay, here's the thing. Risk to reward ratio is not my number one thing, okay? It is important in the sense that you need to make more on your wins, lose less on your loss. But I don't want to impose a risk to reward ratio on anyone, including myself. I'm not going to say to you, you have to make 2-to-1, or you have to make 4-to-1, or you have to make 1-to-1. What I say to you is you cannot make less than 1-to-1 because that's insane, right? So in other words, if you're risking $1,000, okay, you can't be looking for a profit of $500. That's a form of insanity. You want to be making more than $1,000. So my simple policy is this. I'll risk $1,000 with a view that I want to make $1,000 or more. So in other words, 1-to-1 risk-reward ratio is fine because when it reaches that $1,000, I'm not going to take the profit anyway. I'm going to take my stop loss, move it up behind, trail it up and try and make more than $1,000 and try and follow it up as far as possible. And some trades can take you quite far and make you money. So that's how I look at risk to reward. I don't look at risk to reward as, oh, I'm only going to trade 1-to-1 now. I'm only going to trade 2-to-1 or anything to that effect. I don't look at risk to reward that way. I look at risk to reward as I need to make more on my wins, and that can be $1 more than my loss. It doesn't matter as long as I'm making more. I need to make more on the wins as far as I possibly can. It doesn't always work out, as you know. Sometimes with the trailing stop or whatever the case, or your stop loss up to cost or into profit, you're going to make wins that are far less than what your target was in the first place anyway. And it's a win, and it goes into the pocket. So you're going to make lots of those anyway. That's going to be part of your game. But to try and effectively specify a risk to reward ratio, you don't need to do that. You really don't. What's better? Clearly for me, what's better is the more money you can make, the better. The more money, if it's a 6-to-1 risk to reward and you make that money, fantastic. I think what the person is trying to say, and I haven't watched the video, I don't know what you're talking about, I don't even know who you're talking about, but what I would say is, from my assumption, is that they're probably looking at a one-to-one risk to reward ratio is easier to achieve than a 2-to-1 risk to reward ratio, because 2-to-1 is further away and difficult to achieve. Now, that is always the case in trading. It's always going to be the case. That's why scalpers claim to be so good with their win rates, because they have a win rate. And every single trade they win, but they win $10 and they're risking $1,000, and that just doesn't make sense. And they just keep on winning that $10 until they lose that $1,000 and they think, oh, I'm $900 in loss. That doesn't really work out too well, does it? So all I say to you is, yes, the scalpers would be insanely happy because they just got this big win rate and they just keep on winning and they just kept taking small wins. All I say to you is try and at least make more than what you're losing on a trade. 1-to-1 is not the worst thing. At least you can achieve that. But don't click out. Don't go, oh, I'm taking that profit and I'm out of here. Because you see, with a 1-to-1 risk to reward ratio, the number one thing you have to understand is, if you're only working on 1-to-1, is you have to win more trades than you're losing, and nobody can do that. That is nearly impossible. 99% of traders don't make more than or win more than 50% of their trades, no matter what they tell you. If they tell you different, they're either scalping and making less, or they're lying. I've seen traders that are the best in the world and making more than 50% of their trades, winning 6 out of 10 trades is insanely difficult. So you might get close to it on a 1-to-1. You might get pretty close to it, but you probably won't do it. So that's probably where the 1-to-1 is coming from. So yeah, if you want to target 1-to-1, you can do that and move your stop loss up behind it, try and make more, try and make it push up and try and make more on the wins. Because the only way you're going to make money is to actually make more on your wins. I can almost guarantee you're going to make losses if you try and live on a win rate. Win rates, it's never going to work. The win rate's always going to let you down. And the reason I tell you this is not because of some technical aspect. It's because I've experienced it, because I tried it, because I tried to win with win rate myself. And win rates never make you money, because you get a win rate and you're winning, but you're always behind the curve because the losses always take you out. For whatever unknown, weird, paranormal reason, losses are always worse than wins. You know, wins never do as well as those losses. Those losses, man, they can spiral out of control. They can really, really get big. Whereas wins never seem to do that. And when they do, it's like few and far between. So, you know, it almost feels paranormal sometimes, but that's how it is in life. And that's how trading is. Accept that win rates are not going to make you money. Okay, so Rob, one question, for example, your current trade on S&P, your stop loss is still far away. Is there a specific case where you decide to close your trade early before hitting your stop loss? An excellent question. Yes, let's go back to the S&P. Where's the S&P 500? Is there a specific, yeah, my stop loss is up here by that green line, right? The reason I put my stop loss there is because behind the prior high and it's at the resistance, and pretty much if it's going that far, I know I'm done. But yes, if I see that the world is turning, things are changing, and it's broken the structure and it's piling up towards that, yeah, I'll dump it early because I'll know I'm going wrong. It's going to reach it anyway. you can feel when something's going to reach it and just let it go. Very often, there's a few other factors that come into play that tell you, listen, you're on the wrong side of the trade. Just let it go. But if everything goes as is, if everything stays as is, and volatility stays as is, and nothing really changes, then I'll leave a trade until it reaches the full stop loss. Then I'll just wait and see what happens. And if it gets really close to the stop loss, then I'll normally leave it and just let it take out the stop loss, because what's the point? It might just turn around right at that point. But as far as that goes, yeah, there are times when I'll get out early, but that's normally when I can see the failure, when I can see, look, this is really, it's all turned the other way. It's all turned bullish. I'm bearish, and it's all turned bullish. The whole thing has turned bullish. You can see by the pattern, a new pattern develops. Because in trading, often new patterns develop while you're trading. Like you'll see a pattern, you'll see now it's going that way, and then suddenly everything changes and a new pattern develops and a new trend develops. And then you look at that new trend and you think, well, a new trend has developed here, so I've got to go with that. And that's telling me I'm on the wrong side of the trade. Then I'll dump it. I'll get out because I'm wrong. Then I'll know I'm wrong. As for example, gold. Gold's an example of that, actually. You're talking about S&P, but gold as well. If I look at gold, I put my stop loss way down here below the low. But I might, if it goes down below this support level and starts dropping, I might well get out early, because I might look at it and think, well, it's kind of in that area. It's kind of going, let me go. Let me get out of it. But keep in mind that I'm not sitting watching my trades all day. So that could, I might not even see that happen. So yes, I will often do that. Well, not often, but half the time. There are times when I get out. G'day, Rob. How are you, mate? Good. Thank you for asking. 3 ads at the beginning. Phew, you're getting ads. You know what they're doing with the ads on the live shows now, though, is they put the ads on the side. What I have noticed about the ads on YouTube lately is they not letting you click out as early as you used to. I used to be able to skip quite quickly, but these days they kind of make you watch like 60 seconds or whatever, I think. I don't know. Getting out of hand, actually. But yeah, the 3 ads at the beginning, but I see now what they do is they put them on the side. It would be nice if you could decide to listen to my volume or whatever the case, but yeah, they do that on the live shows. Okay, once the trend channel is broken, do you expect the price to get back in it for one last test or previous high and low? So once the trend channel is broken, do you expect the price to get back in for one last test of the previous high and low? No, I don't expect anything. You see, very much, for example, with this S&P 500, it's kind of broken through that trend channel. But what you've got to be careful of with trend channels is this. And this catches people out with trend channels, which is why I don't simply use trend channels. I use support and resistance. So there's my support, there's my resistance. And what I'm looking at is it's at the resistance, there's money there, it's at the top. Support, there's money there, it's at the bottom. There's another support in the middle here, but I don't like to draw hundreds and hundreds of lines in. If it gets down to these low levels, I'll have a look. But when I draw a trend line in and I see it breaks up there and it comes back to retest and then it starts going back up again, you might think, oh no, that trade's going against me because it's breaking structure. And that's true. That's exactly what we say. And the trouble with trend lines is exactly this. Look at that. I can take the trend line and simply move it up because it's developed a new structure. And that's the trouble with trading, is it consistently evolves and changes, and it consistently develops new structures. So your old structure is negated. It is no more. Now we've got a new structure. And effectively, this is still in a bearish structure because all I've done is now move the structure within that support and resistance. So now we've got a new structure. It's no longer a broken structure. It's still bearish, and it's bouncing off that bearish area. Be careful of that. That's going to catch you out. So no, I don't expect anything. I expect it to change. I expect things to move around. So why wouldn't I get out of this trade? Because this has actually moved. Now, I didn't move the line, maybe deliberately, because I did spot it. I did see that, but I didn't move the line. Now I've moved the line. Now you can all see it. Now you can all see that change. There's a big change here. And there is 3 touches. There's 1, 2, 3, 4, 5 touches. That makes that a good trend. So that trend is now moved. So you got a trend. And that stays in structure. Now, if it breaks that again, you can have another look and just see what happens. Keep an eye on it. That's why I don't jump the gun. My main trading is done based on the resistance and the support and where it stands over a bigger period of time, not over the small thing. And I put the trend line in just to guide me as to which way things might be going or happening. Now, in many cases, when it breaks that structure, I look at it and think, it's going that way now. I know where it's going. I know how far away it is, and I know what I'm looking at. That's it. And then I'll decide which way I'm trading based on that and that alone. So why do you think I went short here? Look at besides the fundamentals. I mean, let's be fair. But, if you take a trend through here, it broke structure. It broke to the downside, clear break to the downside, and there is no change in structure. It just clearly broke to the downside, and it keeps on going down. And that's where we are at the moment. What you've got to watch out for here is the double top, triple top. There it is, lying around there. That's probably going to go down again. And that's what I expect from the S&P 500 anyway. So just keep that in mind, right? So when you're trading, that's going to happen. Okay. Trend channel. Rob, we don't make mistakes. It's the market that makes mistakes. Well, of course it's the market that makes the mistakes. How could we possibly make any mistakes? Love it. Just let me know anytime you come to Perth, by the way. Okay, I sure will. I think you'll all know if I'm coming to Perth. Family, Australia holiday. Sounds like a good idea. Family has to come first, Rob, no matter what. Hi, Rob. Great live. Beginner from SA. Love gold. Welcome. Good to have you from South Africa. Love gold. I noticed one thing you said there. Love gold. Trade everything. Okay. Trade everything. Watch all my videos. And don't let anybody tell you just to trade one thing. Okay. Learn the strategy. The strategy is really important. Make more on your wins, lose less on your losses. Learn the systems. The systems are important. And it's great to know all the systems as well. Everybody sees me trade support and resistance and maybe trend lines, but they don't understand that I've gone through all those systems that you guys are going through at the moment. I learned to trade Ichimoku. I learned to trade MACD. I learned to trade with RSI. I learned to trade with volume and all these other amazing, incredible systems. Wyckoff. Most of my training is based on Wyckoff effectively, but I simplified it down to next to nothing because it was crazy complicated. And so just keep it simple and learn to make more on your profits and you'll be fine. But don't get stuck on one product and don't think you can trade on 5-minute charts if you're a beginner. Whatever you do. Everybody gets caught up in that mess. And 99% of traders lose on 5-minute charts. So if 99% of traders lose on 5-minute charts, why do people think when they start trading that they're going to win on 5-minute charts? Because if 99% of traders losing, then clearly you're going to be part of that 99% because you haven't learned to trade yet. So just stay away from the 5-minute charts. In fact, what I recommend for a beginner, start on the day. That's where I started. I used to trade on the day. Day is the most relevant trading time frame. And I traded on the day for years. And I didn't even trade leverage trading. I bought and sold shares on the day. And I can tell you, that taught me everything. That taught me everything that I needed to know about trading and how to trade. Fantastic. And you can use the weekly for a little bit of idea as to where things are going. But the day, it's a good place to start if you're a beginner trader. H4, I just became comfortable with the H4 over years, but there was a time when I used to trade on 5 minutes and 15 minutes and all those types of trades as well, because I thought I was too clever for the markets. And it was when computers came about and I got all involved in leverage trading, which I am now. And I realized over years that it's better just to trade on the slower time frames. And as I said at the beginning of this video where I talked about the 2-hour trading, it's not about coming in and trading on a 5-minute chart for 2 hours and trying to make money quickly and that sort of thing. It's about just spending a short time in your day researching your trades, put a trade in place, position it, leave it, and enjoy it and let it run. Some will win, some will lose. Well, 50% will win, 50% will lose. It's just how it is. Just accept it. It's how it's going to be. Okay. Okay. Thanks for the answer. Pleasure. Yeah. Okay. So that's all the questions done. We went through quite a lot of questions there, quite frankly. We actually did quite a lot of going over the questions. So that's actually quite decent. But at the end of the day, guys, what you're looking for, what are you looking for in the markets, right? Now, if you want to simplify it down, and like I said to you, I've gone through all these systems and all these different ways of trading, and all these systems work. Every single one of them work. And there isn't one that doesn't work. And the reason I say that is a market is made up of buyers and sellers. So I want to buy, you want to sell. And we've both got our reason for it. Maybe we're trading on a different system. Maybe we just think differently. But we've both got a reason for buying and selling. And that's what markets are made up of. What I say is what you need to do then is understand that, well, if that's the case, then surely market is 50-50. And if every system works, then clearly there's got to be reasoning behind it. So that's why I say is markets are 50-50. There's a chance you're going to win, chance you're going to lose. All you're doing is drawing a line in the sand. So if you simplify it down, and you simplify it right down to, well, I don't need loads of lines on my chart. I don't need loads of computer screens up there. I just need to know if I think it's going to go up or I think it's going to go down. So all I do in the market is I look for liquidity, because I understand that I'm not the big guy in the market. The big guy in the market, the 95% of the market, that's the big institutional money. That's those fancy guys that work for these fancy banks and go to these fancy universities and get fancy qualifications for charts. Now, they come along and they do all the buying and selling here, and they basically don't care about you. They're trading against each other up there in the big money. One's trading against the other, perhaps, in big ways, huge sums of money. That's why you see big traders lose. I mean, as I always say, if you think that win rates can make you money, if you think that somehow trading is not 50-50, then why do big institutional traders, big money guys with qualifications, why do they lose trades? Why do they actually lose trades if they're so clever? And it's because they don't know. They can't predict the future either. They're taking their trades based on probability. And here's the thing. They've got more probability than you have. They've got more information than you have. They know more than you do. And they've been doing it longer than you, most likely as well. So now, except for me, of course, I've been doing it longer than them. That's why I understand it. What I'm looking for is their money. That's what I'm looking for. I'm looking for their money because they leave traces in the market. They leave their landmark. They leave their pins on the map here. And they tell you where they've been. They actually leave their footprints. You see? Footprint. They tell you, when I got there, I sold. When I got there, I sold. That's not your money selling it. It's their money selling it. They're selling at these levels because that's where they're selling. Whatever's happening in the market, they're selling. So I know that they've left their footprint there. So I know when the footprint gets back to there, I know that they're going to be considering selling again. So I'm thinking, oh, well, if they get to that point, then they're probably going to be selling. And I just look for their footprints. That's all I do. Now they've created a new footprint on this level down here. They've created a footprint on the 4 hour in the middle here. I could draw another line. I'm not going to bother. I can see it clearly. There's a line. There's a line. If the level gets to here, I'm going to consider which way the market's going because they've left a footprint there. They like buying at this level. I don't know why. I don't know what they got in their arsenal. I don't know what they're thinking about. But what I do know is they like to buy there. And I know they like to buy at this level. The main level is down there. I drew that on the day chart. And I took that from the day chart because most of the really important information is on the day chart. Because you may think that institutional traders are trading on 1 minute and 5 minute charts, but their main claim to fame is the day chart. The day chart is where all the money is. And that's what they're looking at. So don't think that there's a day trader sitting out there on 5 minute charts trading billions and billions of dollars. No, it's not how they work. Rob, how high do you reckon oil is going to go? I love your question. First thing is, of course, I can't predict the future. But what I can tell you is my opinion. And my opinion is it'll probably go to $100. Could go to 120 if things get worse. But that could all be different in the sense that if things get sorted out this afternoon, tomorrow morning, next week, that'll change and it'll come piling back down again if oil comes back into play. Or maybe some more oil fields will get blocked or blown up. This has got a lot to do with transporting it as well and getting it around the world and that sort of thing. So when it comes to oil, it's supply and demand. Now, one of the things you have to understand about oil is a lot of things have changed in oil in the sense that there's a lot more oil available in the world. For example, I believe the USA is pretty self-sufficient with oil as well, although they do get oil from elsewhere. And then you've got Venezuela, which America kind of owns these days. But oil is not a world-beating ender at the moment. And also, we've also got, alternatives these days. So oil might not do what it usually does, but generally when there's a shortage of it, or when things get blocked, or things are geopolitical in the world, this could easily go all the way up to 100, 120 if it wants to. And that's probably where it might head up. But what it's doing at the moment, it's sitting in the range where I've told you guys for 100 years that it should be between 70 and 80. It's at 84 now, 83, sitting in that level. It's a level it likes to be at. But if you look at this now, I've got to move this resistance up a bit because the resistance has moved up to 85 and it's hitting that 85 every time and coming down. So now what you're looking for is if it breaks out of the 85 and goes, it'll probably go to 100, probably head on up to 100 because it's pretty much where it wants to go. There is a gap here that it's going to fill one day in the future. But oil is like that. Over the years, I mean, it ranges. And, when oil's at 60, I'm buying. And when oil's at 100, I'm selling. 120, I'm definitely selling. So, yeah, that's kind of how oil goes. And could go quite high, depending on what happens there. And you've got to be careful with these things as well. A lot of pricing is normally baked in. In other words, when the institutional money decides on a price for a product, they're looking way down the line. They're not looking at today. They're looking at tomorrow. And they put the pricing in based on what they think will happen tomorrow. So that will be on shares, oil, gold, S&P, whatever. They're looking at what they think is going to happen tomorrow. They're trying to predict the future, which you can't do, but they're trying to anyway. And that's how they price product. Now, if there's a sudden change in the news, a sudden change in the policies, then suddenly that all becomes different. And that's why you see these things have sudden moves or sudden big changes. So be careful because these things can move fast. The slightest change, like, oh, we've stopped all that now and we're going to do something different, that is going to affect the market in an insane way, and it will change it one way or the other. Just keep that in mind. Okay. Kevin says, I thought oil would have boomed higher now with all that's going on in the world. It has boomed quite high from its lower levels, but like I say to you, the institutional money is looking at what they think is going to happen and what they think is going to happen in the future. And like I said earlier as well, there is a lot more oil in the world than there was before, or accessibility, let's say. That's always been there. It's just accessibility. And of course, all of those factors play into where oil is going. How much is what's happening with oil at the moment going to affect the whole market? How badly is the market going to be affected? How much shortage is there going to be in the market as far as crude goes? And obviously they're not seeing that big a shortage as yet because they know more than we do. Anyway, anything we can do is look at what's happening and see how it's going. But I do think it'll probably go a bit higher if it continues on and it doesn't end soon. Okay. Hi Rob, since I started watching your stream, you converted me to an H4 chart trader. About 75% of trades I take now are based on the H4 chart. Amazing. I didn't mean to convert you, but great stuff. I thought oil would have boomed higher now. Yeah, it's totally that's totally did when the Russia-Ukraine war started. Yeah, the Russia-Ukraine war was kind of a new thing. You know, we weren't used to that. And that probably just spooked people. So people got spooked by that. But this time, I don't know why. Like I said, traders are insane. They just, you know, they keep on buying and buying and buying and buying and buying and buying. Non-stop buying. The world is collapsing around them and they just keep on buying non-stop. And you've got to ask the question, why are you so relaxed? You know, I've seen all this before. And normally traders get caught out by it. Be careful of becoming too relaxed when things are going on around the world, because the slightest move to the wrong degree will cause a lot of issues. So I try to follow the general picture. So the general picture at the moment would be, perhaps I should be more to the short side on the indexes. Perhaps I should be more to the long side on the oil. Perhaps I should be more to the long side on the gold. Those are general fundamentals that you've got to keep in your mind. You know, when I said earlier in the year or last year, I don't know, when I said to you guys, when you're trading fundamentals, forget about the jobs figures and the weekly Thursday non-farm payrolls and CPI and all this rubbish. That's not what's going to move the markets. That's going to move it quickly and up and down, and it'll settle back to where it was. What you're looking at is the bigger flow, the bigger things that are happening in the world. And what the bigger things that are happening in the world at the moment is the world is crumbling around your ears at the moment, okay? Will it continue? We don't know. Will it end? We don't know. But what we do know, okay, is this is happening at the moment. So surely the fundamentals should be simple enough to think, well, if that's happening, then perhaps I should look at what's happening with oil. I should look at what's happening with gold. I should look at what's happening with the S&P 500. And the S&P 500, in all likelihood, should probably be going down, and gold should probably be going up. It's a simple concept when you look at the bigger picture of fundamentals. So, like I say, when people ask me, do you trade with fundamentals? Yes, but only the big ones, not the little ones. Little ones are a waste of your time. The big ones are what you're looking for. The big things that are happening in the world are what you're looking for. The big monsters, those are the ones that move the world. But the big ones, what you'll find is so many traders overlook them. So many traders are relaxed at the moment, not even looking at what's happening in the world. Maybe because they can't see it. Maybe because it's not being shown to them. Maybe because they're not seeing it on the news. Maybe because it's not all over the place. I don't know. It should be. I mean, it's there. But maybe they're just not looking, and they feel comfortable because they're in a comfortable little space where they're not getting bombed, for example, and they're quite relaxed and everything's fine. So they'll just buy and everything's okay. That might be it. But yeah, it's a very strange thing, because in the past history, in the old days, when something like this happened, wow, there was an immediate rush to safety, an immediate move. But these days, I see a lot more laid-back sort of trading when these things are happening in the world. Okay, it's totally when our first-time viewer from the UK. Thanks, buddy. I'm still practicing in the sim, but I'm 5% over 2 weeks. Happy days. Okay, just bear one thing in mind. Lovely to have you, by the way. Lovely to see you guys coming on. Hi, Rob, first-time viewer from the UK. So one thing I would say, you're still practicing on this sim, and there's a massive difference between the sim, the demo, and real life money, because what you're learning at the moment is technical trading, and technical trading is the easy part, because if you're not using real money, all you're doing is learning a structure. Okay. Whatever that structure might be, I don't know what system you're using this or if you're using something else. But the structure is one part. The structure and the system that we use to trade, these lines, these charts, these candles, these little sticks and whatnot, is about 20% of your trading. That might sound low, but that's it. That's about 20% of your trading. Your ability to do that It's about 20% of your trading. I can teach that to a primary school child and they'll be able to do it. No problem. The problem comes in when you put real money in the market. The fear starts to strike in. The panic starts to strike in. The sweating and the psychology of it. And then, of course, patience, fear of missing out. All of those things will start to apply. So if you're just starting out, do yourself a big favor. Try and watch as many of my videos as you can and try and understand the psychology behind trading. Because one of the big things that are going to happen is, and I'll ask you this question, okay? Because you're going to start trading with real money soon, because that's what we normally do. I know you can't wait to get the real money in there and start making money, particularly since you're already making a profit. So what I'll ask you is, if you have, I don't know how much money you got. You could have millions, you could have nothing, but let's say you've got $100,000 and you take, that's your last $100,000 in the world. You put it in the market and you immediately start losing $10,000. How's that going to affect your psychology? How's that going to affect what you're going to do next? Let's say it drops and it starts losing $20,000 or $30,000. Now you've only got $70,000 left of your $100,000. How's it going to affect your fear? How's it going to affect your psychology? So think about that. Think about that, how it's going to work for you. What I would normally let people do is say, okay, you've traded on the sim and you've made a profit. And I'm just trying to be helpful here because I've made all these mistakes in my life. Okay, so this is just for you guys. What I would normally suggest is, what you can do is, instead of going straight to your own money, which is probably a large sum of money that you want to put in the account, jumping in and then finding yourself in trouble, is pay for a funded account. If you go to my blog, the links are in the description. If you go to my blog, you'll find some there if you want to try them out. Just, take a funded account, anyone, and pay for it and see how you do there, because then you're suddenly trading with real money, okay? But not quite the real money out of your pocket, but the real money of a funded account. So if you lose that, then you know that you're limited to losing the $1,000 that you paid, or the $500 that you paid, or $200 that you paid for your account. That's all you're going to lose. Or maybe if you've made a profit in the account and you're trying to get that profit out, then that might be a little bit more of a thing, because you want to keep that and you don't want to lose it. And if you lose it, you're going to be quite disappointed, because that would have been your money as well. So maybe in the middle, sort of put a funded account in the middle, because, I hated funded accounts. I thought they were all scams. And about a year ago, or the beginning of last year, not this year, last year, I started to realize that there's a need for them, to come in between your real money and demo. And it really does help. And it just sort of puts your psyche on a different level, learning that you're doing something real. And then you can start learning from that. And then it's still not quite as painful as real money, but it gives you an insight. And then you can start seeing how well you're doing with that. And if you're doing quite well with that, then you can start pushing on to putting your real dosh into the market and see how that goes. There's a big difference between clicking the button when it's not going to affect you at all, and clicking the button when there's quite a lot on the line. When there's a lot on the line, it makes your finger a little bit more shaky on the mouse. Okay, that's just a little bit from me. Where am I? Thanks a lot, much appreciated. If you have time, you should take a look at Petrobras chart, Brazilian. It was looking promising, at least yesterday. Okay, I'll have a look. I'll definitely have a look. The FTSE 100 had a big drop earlier this week, but it's slowly probably going to make it back up. Kevin, the FTSE had a drop because the FTSE, like the DAX, like all the others, SA40, all of them, will tend to follow the US markets. It will tend to follow the other markets, the other indexes. You know, there's a lot going on in the world. There's a lot of geopolitics going on in the world. So clearly, all of them are doing the same thing. So I expected the FTSE to do that because the UK also got sucked in. So yeah, that was always going to happen. Once it all settles down, it'll start to go back up. But I wouldn't be jumping into any great big long trades on the indexes while there's still strife in the world, while people are still, getting upset with each other. Because at the moment, there's more and more things going on than not going on. So it's important to keep an eye on that and to keep an eye on what's going on in the world and understand that those geopolitics are going to affect the markets. So, if England's getting dragged into a UK, Scotland, Great Britain, then there's a chance that their index is going to take some strife as well. And even Germany and all of them are they're gonna have a knock because there's a knock-on effect to all of these things. Okay. All right. Where can I find the breakdown of your strategy? You can find the breakdown to my strategy in just about every video. At the end of every video, generally. I've tried not to put it in every video because I had a few comments and complaints of I keep repeating myself, but it's trading is kind of the same thing over and over again. I can't tell you something different every time because otherwise that would just defeat the object, wouldn't it? You want to learn to trade. So yeah, it's in most of my videos. At the end of the videos, the strategy is simple. It's make more on your wins, lose less on your losses, and keep your risk the same on every single trade. And then I basically show you how to do that in most of my videos. Most of my recent videos go through, look for the strategy part, and it'll show you how to do that. Okay, got that one. I appreciate what you're saying with funded account. You do have to be good at trading, but not to get that shut down. Or is not a prop firm. I get this psyche thing. I do feel to win. Okay, so on the prop firm funded account thing. Look, the ones I've used or put in the blog is very much you can trade anytime, do what you want. It's kind of CFD, and you can trade during the news, you can trade over the weekends, and just trade like a normal trader, which is really good to learn with. There are a few out there that are quite nasty about, you're not allowed to trade overnight, not allowed to trade during the news. They'll close you down if you do this and do that. A million rules. You don't need that in your life as well. But yeah, there you go. Hi, hey Rob, I'm new here. YouTube recommended you to me. Is that good or bad? Man, I don't know. I honestly don't know if it's good or bad. I hope it's good. But you can ask all the other guys here if it's a good or bad thing that you landed on my channel or not. But I'm sure glad that YouTube's actually recommended me to someone, because I actually wonder if they ever do sometimes. Yeah, but it's good fun growing the YouTube channel and having a bit of fun with it. But yeah, is it good or bad? As I always say, I've been doing this a long time, but that's trading, not YouTube. YouTube I've only been doing for a couple of years properly, that is. I mean, obviously, like everyone else in the world, I've made a couple of videos in the past about other rubbish, just for fun, to see what it's like making a video and that sort of stuff. And then a couple of years ago, I decided to get serious about this and do this. It actually wasn't the plan, actually. When I started out, I was kind of peeved with what I was seeing, and I just decided to put a video out there. And as per usual, when you put a video out there, it gets like 12 views, you know what I mean? And I think, why did I even put the video out there? But then I decided to push with it, and this is where we are now with a YouTube channel. And yeah, well, I'm not going to stop it now, am I? It's great fun. Yeah. So hopefully it's good. Hopefully it's a good thing, and hopefully you enjoy it. And watch the other videos. Have some fun with it. Matt, would you like me to cover the strategy quickly? I will. It normally takes me 20 minutes to go over the strategy. But what I'm going to do, okay, I'm going to go over it quickly for you. All right. So I'm going to do it as quickly as I possibly can for you, so that we don't hold everybody up for too long. Thanks for watching my videos. I'm really glad you're watching the videos, by the way. And I am Blue Mango. I also checked out my other videos too. Good. Thanks, guys. I'm glad you guys are watching. It's fun. That's why I put them out there, so you guys can enjoy them and so you guys can watch them. Let's quickly go over the strategy so that Matt can check what the strategy is. So the strategy is simple. And sorry to the guys that know my strategy so well that I repeat it over and over again, but I'm going to just go over it quickly and everybody knows it. And it's very, very simple. What I do is I keep the loss the same on every single trade. In other words, if you have an account and you decide that the risk is going to be $1,000 on every trade, then that risk must remain the same on every single trade. And there's a reason for that. The reason for that is if you change the risk amount on every single trade, if you trade $1,000 on one and you risk $500 on the other and $200 on the other, then you're not going to have a balance as to how much you're winning and how much you're losing. And you're generally going to lose more on the bigger ones, and that's not going to help. That's not going to work. So keep the risk the same on every single trade. Now, you can decide what that risk might be percentage-wise onto your account. Now, I hold more than one account, so I try to maximize an account at $100,000, let's say. Now, you might want to risk 1%, which is $1,000. You might want to risk 5%, which is $5,000. You might want to risk 10%, which is $10,000, depending on your threshold. But understand this one thing. If you lose 10 trades risking 10%, you lose your whole account. If you risk 1%, you only lose 10% of your account. So that's up to you. But let's say it's $1,000 per trade. Then you want to risk $1,000 per trade. The basis of the strategy is make more on your wins, right? So what you do is you look at a trade like this gold trade here. Here's a gold trade here, and you say, I want to trade gold. I want to look at my gold trade, and I want to take a gold trade here, and I want to go long. So I take my long trade. I say, the first thing I want to do is, where am I going to put my stop loss? I'm going to put it below the low, and that's where I feel if the trade gets to this level, our trade's worthless. You can throw it in the dustbin. I'm not going to move my stop loss. I'm not going to dollar cost average. If the trade gets that far, I'm out of here. I'm gone. It's done. So that's where I want my stop loss. And I want my stop loss to be $1,000. Okay, this is showing 800, but if it's 950 or something like that, it's fine. Just work out your lot size according to that. And then I want my take profit up at the high, okay, which is up there at the high. So I've worked out my take profit would be on that stop loss and that take profit, it would be around 2-to-1 in any event. But I don't say that you must have a 2-to-1 risk to reward. I say you must make more on your wins, lose less on your losses. Then you just need to work out how much is $1,000 on that, and how much is, for example, your reward going to be. Am I going to make more on the win than I'm going to lose on my loss? That's the important thing. So even if I take my profit there, I'm still going to have a close to 1.2-to-1. I'm going to make more on my win than I'm going to lose on my loss. And that's all I'm looking for, right? I'm not worried about what that green thing is showing or what it's saying. What I'm worried about is it going to be a good risk to reward. So then what I'm going to do is I'm going to say, all right, I'm going to take this trade long based on the fact that I'm going to make a win. Simple, really. If it comes down and takes the stop loss up, well, tough luck. You let it go. You're going to lose a number of trades. I'm going to talk about that in just 1 second, so bear with me on that one, okay? But if it wins and it goes up into a profit, what you're going to do is you're going to take your stop loss. You're going to move it up to cost. When it gets a couple of $100 into a win, you're targeting, okay, you've got $1,000 stop loss. It goes like $250, $300 into a win. Take your stop loss, put it up to cost. It's fine. If it comes back, so be it. It moves up further, moves up further, moves up further. And you just keep following it with a stop loss. When it gets right up to the take profit, move the take profit away, move your stop loss up right up behind it. If it comes back and takes it out, you may target. If it keeps on going, you're going to make more and more and more profit. In other words, you never click out on a profit unless you deem it absolutely necessary. When you see the market changing, you see something change in politics, you see something happen, and you know that the market's just going to change, it's just going to, the plan's changed. And if your plan changes, click out, obviously, take your profit and go. But what you're trying to do on every single trade is make that big win. Now, based on the following, okay? So it really doesn't matter which way you take your trade. Let's say this is 18 trades in front of you here. Based on the following, it's actually 19, but let's say it's 18, okay? It doesn't matter how you take the trades, what system you use to take the trades, or whether your system is better than mine or mine is better than yours. It really doesn't matter. The basis of it is this. And once you understand that trading is 50-50, once you understand that you're going to lose half your trades, then the risk doesn't matter anymore. If you're risking $1,000, if you're risking $5,000, it doesn't matter, because you know you're going to make more on your wins, but you're going to lose on your losses. And once you understand that factor, then that suddenly negates everything that's happening. Because of these 18 trades, let's say you lose 9. 9 is half of 18, right? So 9. What have you lost? You've lost $9,000. Oh my goodness, you're going to run away with your tail between your legs. You've lost $9,000. You lost 9 trades out of 18. But what if you win the other 9? Now, what I've worked out over time, because I've been doing this for 34 years, what I've worked out over time is on the other 9, when you win, some you're going to win 1-1, you're going to win 2-1, some you're going to win 6-1. But on average, when you work it all out, it normally comes down to approximately 2-1. In other words, on the other 9, you're going to win $18,000. That puts you in a profit of $9,000. That's my quick explanation of the system, of the strategy, not the system, the business plan and the strategy. In other words, what I'm actually telling you is that this charting system, support and resistance, buy and sell, doesn't really matter. All it does is give you an opportunity to manage a trade, gives you an opportunity to get into a trade, and it gives you an opportunity to feel good about the trade that you're taking. But what you're actually doing is taking a strategy and using that strategy to make money at the end of the day and make more on your profits, because that's what you're looking for. You're looking for a strategy that's going to make you more on your profits and lose you less on your losses. And that's the basis of the strategy. And that's the quick one. That's the quick way of putting it. That's the, normally it would take me 20 minutes to go through that explanation, but I think I've just done it in about 5 or 10 minutes. So hopefully you got it. So if I trade with a firm, I keep my account until I lose over the limit. Yes. Well, depending on the firm, but yes. Repeat the strategy as much as you want. You can never get enough info, in my humble opinion. Absolutely, Kevin. Kevin. Nice. So simple. Sounds like the key is discipline. The key is very much discipline. You have to be disciplined. You can't change things. You can't move things around. So, for example, if you want to change your stop loss amount, let's say you're risking $1,000 on every single trade. Let's say you want to change that. You decide, no, look, I've made a lot of money on my account. My account was a $100,000 account. Now it's a $200,000 account. So I want to risk $2,000 per trade. Make a conscious decision that you're going to change that amount, change the amount, and then every trade from that moment on is a $2,000 trade, not a $1,000 trade. That's what you got to do. You've got to keep that the same. It doesn't have to be exactly $1,000. Don't get me wrong. It can be $950, $975, $1,020. Obviously you're not going to get it to the point every single time, but you're going to try and get it as close as possible to that area so that you can keep an even keel on your account, because you can imagine what's going to happen. What's going to happen is you're going to say, I love trading gold. So on gold, I'm going to risk $5,000. I'm going to risk $5,000 on gold because I love trading gold. I always win on gold. I hate trading the S&P, you're going to say. On the S&P, I always lose. So on the S&P, I'm going to risk $500, okay? Guess which one you're going to lose, and guess which one you're going to win. You're going to lose the one. You're going to lose the gold on $5,000, and you're going to win the S&P 500 on $500. And you know what's going to happen? You're going to be in a huge loss, okay? And that's the mentality of a trader, a human being. You always feel like you know that one better than that one. So no matter how good you feel about any particular product, any particular trade, if you think you're the best at Bitcoin, doesn't mean you must trade more on it. You must trade the same on every single trade. Same amount, over and over and over again, no matter how tempted you are to trade more. The only time that you trade more is when you have a trade that's going in your favor. When it's really going in your favor, you have a trade and it's going in your favor and it's moving up and it's going close to that. You can, if you feel the market's going in your favor really well, double up your trade or add 50% to it, make the trade bigger. Moving a new stop loss in place for that trade, so it's almost like a new trade, but you've doubled your trade, you've made your trade bigger. So you can make your trade bigger based on, it's like a second trade, based on the fact that you feel like it's a good new trade to have. It's a good, this product is really doing good by me. I do it quite frequently with the VIX. I mean, if the VIX is going well and it's definitely going to go in my direction, I'll add more. I don't mind that sort of thing. And I'll do it with shares as well, with trades and that sort of thing. So yeah, you can do that. Okay. Right. Okay, hi Rob. I don't have all day to watch charts. What time interval is best for a day trade? The prop I'm using doesn't allow holding overnight. Yeah, that I like prop firms that will allow you to hold overnight and weekends and things like that. This not allowing you to hold overnight puts pressure on you as a trader. You have to sell at the end of the day. It's very difficult to trade 4 hour if you have to sell at the end of the day. You end up, they're pressuring you to trade on lower time frames. And if you do that, there's a possibility that you're going to lose. So it becomes difficult. Like I say, everywhere in the world, there's a different time frame. And the problem with that being that you're going to come to, you want to come into work at 7 or 8 in the morning. You want to start your day and you don't want to work till 10 or 11 o'clock at night. I mean, and depending on where you are in the world, this could happen. So you want to just trade for a couple of hours and leave it. So what I do is I come in at my time, in my time zone, and I trade on my time zone. I do my research, I have a look at the trades, and I say, I want to go long on that, I want to go short on that, and I take my trades and I leave them in. But you see, I can leave my trades in overnight, particularly on the cash accounts. There's 1 or 2 funded accounts that I play around with for fun. Those allow me to trade overnight as well. So I can leave them in and I don't have to worry about. You have to worry about, of course, what time is overnight. What time is overnight for you? Where is your funded account? What country is it in? And what time do they cut off? So you've got to worry about that, which is a real pain. So for me, I come in the morning and I choose what I want to trade and I leave it and I forget about it and I come back tomorrow morning and I have another look. I will have a look during the day. So what you're going to have to do is you're going to have to come in the morning, choose your trades, and then go and do your thing and then come back before closing time and close out your trades. But like I say, not being allowed to hold overnight is going to affect you immensely, and it's going to be difficult for you to trade because you're going to have to trade on much faster time frames. And the faster time frames, like I say, 99% of traders lose on those 5-minute time frames, just by the way. Okay. I'm short on the gold. Come on, you see the break of the trend line. I love that comment, Rob. I'm short the gold. Come on, you see the break of the trend line. Okay, you've done the right thing. Okay, you've actually traded based on the trend line. You haven't done the wrong thing, okay? But you haven't done the wrong thing in the normal scheme of things, okay? But the one thing that you did do wrong, and this is what I would always have spotted and showed you, even if there was no strife in the world and everything was pretty straightforward and plain sailing, is this big red support line here where the money is, okay? So while it broke the trend line, that was your target effectively, because it was always going to come to the support line and then go, what should I do here? Okay, so that support area is a big area. and it has hit that support and it's bouncing around there. That's not to say that it couldn't carry on going short and go mad, but it has hit that support area. It is respecting that support area. So when it broke through the trend line, you were very close to the support area. So what I would say to you is you were looking at a very poor risk to reward situation, or a one-to-one. I don't know, but that should have been your target, that support area, when it broke through there. And it's not a very big one. So what I look at in a trade like this is, okay, it has broken to the downside. Support area is held, and now it's bouncing off the support area and moving up. So I understand why you went short. But what you've got to be careful of is in scenarios like this where you take a short based on these support lines, you see your risk would have been, let me just see here. Yeah, you would have had a negative risk to reward, and that's not good. That would have been against you, because your target would have had to be at the support, and your stop loss would have had to be at the resistance, and the resistance would have made you more profit. So it would have made more loss. Okay, so your stop loss is $1,000 and your profit's 645. I wouldn't take that trade based simply on risk to reward, poor risk to reward. So that's where you've gone wrong. That's the only place that you would have gone wrong. But that's not to say that this can't carry on going short. Obviously, I mean it could. Why not? Okay. I just need to remove a bunch of zeros. I'm a baby trader, so new, just working with a few hundred now. I change my risk often. It makes me emotional. I love this strategy. Okay. So, yeah. So follow that, Matt, and remove a few zeros if you want to. Just, do whatever you want to learn and figure it out and become comfortable with your trading. The difficult part is to become comfortable with your trading, become comfortable with your loss. Once you understand that you're going to make more on your wins and the loss is negated, then you can increase the loss because you understand that no matter how much you lose, you're going to make it back anyway. The main thing you've got to learn is that you're going to take loss. You're going to take loss. You're going to take a lot of losses. In fact, half your trades are going to be losses. Once you get that, then you understand that you've got to keep the losses the same, and you understand that you've got to make more on the wins. And when you make more on the wins, then obviously the overall picture is going to be bigger. You see, I also don't measure my profits on a daily basis or a weekly basis or even a monthly basis. I measure it over an annual. So I look at an annual basis and I say, over a period of a year, I need to make so much. I would like to make so much. And with my investments and with my trading and with this and with that, bigger picture, what do I end with and how did it work out? You're not going to win with everything. That's normal with any business. You're not going to win on every front. There's always going to be fronts where you take losses, where you come short, and you have to accept that in life. You have to accept that in trading, and that's the important thing. I think the reason I'm able to go through these procedures with people a lot easier is because I've been in so many businesses in my life. I've had a few businesses, and I understand how assets and liabilities work, and how profits and losses work, and that sort of thing. So I understand that you can't win on all fronts, and there's always going to be some strife, and there's always going to be issues and problems and whatever the case. Like if you have a supermarket, you're going to have to deal with losses like theft and things like that. You have to deal with that. So you have to deal with losses here. If you treat this like a business, you understand it better, and you understand that you're in this to make a profit. You're not in this to draw lines, squiggly lines and candles and things like that. Keep the losses the same. Start with lower numbers so you can get your head around it. Because, if you put big numbers in and they start losing, you're going to start sweating quite quickly. Believe me, it can be. It depends on you and your fear levels and your threshold and how much you can take. But believe me, you're going to start sweating heavily when you start taking a heavy loss. Okay. Gold is in a range right now. I would go in just show until I see where it wants to go in. Humble opinion once again. Gold is in a range right now. I wouldn't go in just now until I see where it wants to go. Kevin, yeah, that's true. You could say, well, it's in a range. I'll wait and see what happens. You must remember I'm basing it on it's bouncing off the support. So you can always trade along based off, it's bounced off the support. But I'm also being quite jammy by sort of basing it on the world politics as well and saying, well, gold's a good place to be long at the moment because, people tend to go for gold when the world's falling apart around them. So, I look at it that way. But yes, it could obviously come crashing down as well. But I'm calling for 5,600. That's my call. And we'll see what happens. If it gets to 5,600, yay! Okay, that's it. Now, how do I pick a stock to trade? Agreed, I've owned and sold 3 businesses. Yeah, there you go. So now you know. I'm in a very similar predicament to you, Matt. And I've done that over the years with my trading. And once you have that mindset, you understand these things a little bit better and a little bit clearer. And that's a good thing. That's a really good thing because I can tell you now that 95% of traders have never owned a business. And they don't have that background. And that background can really help you because you understand where things can go. So it's really good for you. Now, how do I pick a stock to trade? Now, that's the difficult one. If you're going to pick stocks or if you're going to pick indexes. So what I do, in the early years when I first started out, I only traded with shares, stocks, okay? That's a good way to learn. They're nice and slow and they're easy to learn with. And if you're trading on a day, even better. They're easy to pick up and learn. So trading stocks, what I would do is I would pick the blue chip ones in my country, whichever that might, if you're in America, that would be Amazon, Coca-Cola, McDonald's, things like that, Nvidia, what have you. Pick the ones that are blue chip, the good ones, and trade those and learn to trade them up and down and what have you. But what I do now is I only invest in stocks. In other words, I take stocks as a set and forget. So if I buy Amazon, I buy it and I keep it forever. I never sell it and I add to it on a monthly basis, or other stocks, whatever the case, whichever one I feel like adding to on a regular basis. I never look at them. I don't even know how much some of them are. I'm not even interested. I just buy, because I know the bigger picture over 100 years, they make money. Okay. They're just going to keep on making money. And if you go and look at my investment video, which you'll find in my 600 odd videos, you'll find one there that says how to invest. And it'll actually show you how much money you would make. And you will fall on your back and you'll be in shock and think, why didn't I do this when I was 20 years old? So yeah, okay, you're going to make a lot of money from that. So I don't trade shares anymore for the simple reason that I don't want to confuse trading with investing. That's the only reason I've separated them. Otherwise, I would still trade them. Nothing wrong with that. But I want to keep that separate because otherwise my mind gets psychologically fixated on what's happening with that particular share rather than forgetting about it and leaving it to sit and forget. So what I do now is I would rather trade these products, okay, which is Forex, crypto, commodities, and indexes. Indexes, S&P 500, NASDAQ, Dow Jones, and then, of course, oil, oil being down here. Oil, of course, there's a good one. And then, of course, what did I just close now? Not even sure what I closed there, but it doesn't really matter. I'll put it back later. Okay, where's what I can do is just put this back like that. That's fine. So, and then gold, commodities, things like that. So these are the things that I'll trade at the moment. I can't be bothered. There's a US dollars that are. That's a currency trade that I've taken. So these are the type of trades that I'll take now. And then I'll just trade them up and down. And and the shares I keep simply for investment. That's it. And then, of course, the VIX, the volatility index, if you've got that available to you, I'll trade that. I just buy it long at 15, let it spike, and then take the money and then trade it at 15 again. Yeah, because of Armageddon long. Hour size entry and trades, short time, 2 hours for recovery. how to size entry in trades is what I discussed now about stop loss. Okay, that's how you size a trade. End of story. You size your trade with a stop loss. We've gone over that, so I'm not going to go over that again. You can just rewind the video a bit and go and have a look at that. But effectively what we do is we size the trade with stop loss. In other words, we want $1,000 stop loss. How many contracts is that going to make me if I size the trade on a stop loss? Long. So if I say I want my stop loss there and I want my take profit there, then I need to have 0.21 lots. That's as simple as it gets. Okay, that's how you size your trade. Size your trade based on your stop loss. That's it. Based on $1,000 stop loss or whatever the case. It's not complicated. That's what you do. Okay. All right. I think I'm going to be on my way now. I think it's time for me to go and sign out and see you guys next week again. I've really enjoyed being on the show with you guys. It's been a lot of fun. And I hope you're all trading geniuses now and you all know exactly what to do. But we'll be back next week and we'll tell you more. If you haven't joined the members area, make sure you do that because it supports the channel, buys me a cup of coffee. And also, I give you the trade of the day every day in return for that. And I also will do research for you and that sort of stuff as well. If you haven't joined the Telegram channel, completely free, guys. Join the Telegram channel. Chat to each other. Enjoy. That's what it's there for. It's so that everybody can bounce information off each other and whatnot. And if you haven't subscribed and liked this video, make sure you like this video. It's cool. And make sure you subscribe so you can see my next videos. But it's been really cool having you guys again. I love coming on the live shows and having you guys here. I will bring the Tuesday live show back. I'm pretty sure I will. It's just a question of time. I'm just waiting for that all that stuff to sort itself out. And we'll be back with that. But guys, thanks for being here. Thanks for watching. I hope you enjoyed the show. I hope I wasn't too boring, but I'm pretty sure I wasn't because you're still here. So yeah, there you go. Thanks a lot, guys. Till the next one.